Good evening, everybody. It is indeed 6 p.m. I am recording. We are here for the clinic Monday, 15th of January, and ideally, I'm going to be recording, what's the word? In order to share publicly, so I won't be sharing any of our major strategies, okay? Welcome, then, everybody, and we shall dive in. Again, no major strategy and no video. I just really want to talk about an indicator tonight. Evening, Ben. Evening, Claude. Nothing to do with mindset, but I do have a good one prepared for next week's mindset. So, diving in, this is with many thanks to Rory for having introduced the idea in the first place some years ago. Got me reading, it did. Got me learning, it did. What is linear regression then? Well, the main reason I want to throw this in the mix is simple. We are dealing with high probability, and linear regression is all about the mathematics of probability, statistics, if you like. Linear regression analysis is used to predict the value of a variable based on the value of another variable. We have it. It gets complicated. The variable you want to predict is called the dependent variable. The variable you are using to predict the other variable's value is called the independent variable, for those of you who are interested in the maths and would like to read up on it. In statistics, linear regression is the statistical model which estimates the linear relationship between a scalar response and one or more explanatory variables. The case of one explanatory variable is called simple linear regression. For more than one, the process is called multiple linear regression. Simple linear regression aims to find a linear relationship to describe the correlation between an independent and possibly dependent variable. The regression line can be used to predict or estimate missing values. This is known as interpolation. Linear regression identifies the relationship between the mean value of one variable and the corresponding values of one or more other variables. It is designed to predict continuous values, not discrete categories. Yeah, hi Claude, you lost us at hello. Yeah, it's okay. You know, I'll go through the major maths of it. It's like y equals a, x plus b. Yeah, where x is a number of bars and y are prices. How is it useful to us? Well, if we go add indicator and we type LIN, there are a number of linear regression tools: the forecast, the intercept, the squared and the slope. Some appear on the body of the chart, some appear below the chart, and we used to use the linear regression squared and the slope in order to give us breakouts of range. I'm interested in this today, the linear regression intercept, and I've added one to our charts, and there he is now. In fact, no, he isn't. That's the time. Is it him? Yes, it's him. There you go. There now is a linear regression intercept. Now, I've coloured it white up and white down, and as you can see, I've got a kind of a what's the word, buggered up version of the red light green light. I've got a standard, well, our fast MACD at the bottom, and I've got that EMA at the top that we use in the red light green light strategy. And the reason I wanted the MACD is because we still are interested in divergence, we're still interested in hoppers, but in most of our other strategies, if we have a look at the long range, for instance, many times the question I'm asking is, are we above the white line? Are we above the white line? Or are we below the white line? And is the yellow line below the white line? Or are we below the white line? So there's a white line already ideally emblazoned or imprinted into your mind. So here we have a white line. I'm not going to worry about green up, red down, or anything confusing like that. Although you could do that and say green up, red down, and have an above and below method there. But I'm going to leave it white. And what I might do is put on our standard Bollinger Bands, BOL, for a moment. Bollinger Bands are hopefully they're the standard. What are they indeed? They're 21 and 2, and the middle is invisible, so they pretty much are, but I'll make the middle visible. Now, remember I say above and below the mid band. Okay, so below is good. The linear regression, however, is based on statistics and probability. So where we are below, we're good. You see the way we come above sooner, and anyone is capable of saying, oh, but that carried on, and great. But I don't care. I care about the pips that we are in what's the word, in the high probability of taking, and below that white line, yeah, out, and then yeah, out, yeah, out. So it would get you out more than the mid BB would. But as you can see, there's some instances of green there, and I wager that some of our members, in fact some traders generally, would be, what's the word, loath to hold something when it's pulling back. That's the description I'm looking for here. Loath to hold when it's pulling back. So this linear regression is based on statistic, or it's a statistical mathematical line calculated obviously a lot faster and a lot more, what's the word, usefully maybe, than is the mid BB. If I go into that mid BB and I was going to say I'll hide the outers, I won't even bother. I've scrolled back to the morning because it is indeed Martin Luther King Day, and oh my, sorry, someone's messaging, can't get in. I'm not going to worry, we're recording this. So I've scrolled back to the morning where the market was busy, and we can see there between 7, there's some longs, there's some shorts, yes. And yes, the mid Bollinger, because it is slower, would keep you in longer. But there are re-entry opportunities, and there are reasons to go short, and there are reasons to go long. And when we're agreed with down the bottom, we're agreed with at the top, if you know what I mean. So I'm going to make those invisible for a moment. And I'm going to say, there you go, below, because here we've got a below, but it's not quite below the linear regression, is it? And there we've got range. How many times have we looked at range when the MACD line is trickling along 0 and people have been caught out? So yeah, you're still going in, but it's green. So are you? It's green. Are you? There now we've got a below and a hopper, and the hopper combos are where it's at, or the RTF continuations and below are really useful. Now I'm using an 8 in here. That's the time. That's the one. An 8 period linear regression. There's not going to be a hard and fast rule because, of course, everybody is going to be different. And if I say 9, 10, 11, 12, 13, there you go. Now you're looking at something more along the lines of a mid Bollinger saying sell and hold even through the pullback. But if we go back down to an 8, you know I'm only ever going to use fib numbers. Then you've got in and out here, not here. In here, not okay, higher up. So there'll be some times where you don't like it, there'll be some times where you do like it. Again, the reason I want us to look at it is because it is based on the mathematics of statistics, and we are trading high probability statistics. That's the reality here. Statistics is what we're trading. So we're above, we're below. Now, last week in one of the sessions, the Australian Dave was talking about that he uses it, and I said, "You getting ahead because we're going to go through that in the Monday clinic." And I was hoping he didn't give you the settings and everything, but it's something that he's using off his own bat, no problem. It's a good thing for scalping and range trading. Look at the range here. There's a rangy bit across here. So in, out, in, out, in, out. It will help you, I think, more with range than many other of our indicators. You're all well capable of looking at the T2B2 and adding this, the linear regression intercept at the period 8. I've got it quite thick, white up, white down, just as an above and below rule in there. You're all capable of adding it to our major strategy so that I can indeed share this publicly and keep our major strategies under our hat, if you like. And when it runs, as you can see, it runs nicely. When it runs nicely. Notwithstanding that it's Martin Luther King Day and a holiday in the US of A, it is a holiday and that will slow things down. So it will be interesting to look at this tomorrow in our live trading sessions while we have our better strategies on screen, will it not? We can see, I'll tell you what I might do. I might have a look if there was anything major on the Dow at the US Open. Let's see. Well, there's some moves, 15, 14, 30. Yeah, I guess not really. That's not what we'd normally see on a US Open, is it? But above the white line for long, below the white line for short, and of course always factor in the hoppers. We know we want a hopper for the long, we want a hopper for the short, and consider higher lows, lower lows divergence. So this sell signal isn't the strongest, is it? I'm going to go back to DAX. I'm going to go back to the morning where we knew it was alive because obviously Europe is awake and alive then. And there you can see some nice moves. If we look at the top, we got a 16,670 at the top. We got a 16,640 at the bottom. So there's a potential for 30 pips in there. Below red, still in hopper mode. Divergence at the end. So you'll be locking in tight. And we know about our 40s, our 60s, and our big round numbers, etc., don't we? Hopper combo right there above a white line, validating at about what, 645, 646 something, and moving up through to 660, and obviously breaking out. I think there is something in this linear regression intercept worth looking at. I wonder are any of our programmers on? Let's have a look. There you go, there's one. Because, sir, I know that you'll know I'm thinking of you. I don't have a decent one for MT5 nor for MT4 neither. I don't have one at all, to be honest. Not a linear regression intercept anyway. So if anyone does have a linear regression intercept for MT4 or MT5, please do feel free to share it with me in order that I can make sure the members in the group get it, and in order to make sure that I can tweak it and faff it and make it fit what it is we want it to tell us, because remember, when we come to trade, we don't want us to tell us what to do. We want to program our charts and our indicators so that they tell us what to do, and it takes away the human element. Well, it doesn't fully take it away, but it certainly limits it. And I always say we should do our best to not mess with our trades when we're in them. In fact, it's written on several of the strategies. But above and below is the rule, and I am liking the linear regression intercept as that rule. So where we have a mid-Bollinger Band, in future I would like us to consider a linear regression intercept. And there you go, Claude just put it on, and if you can, anyone can, as he says. Yes, absolutely. I suppose the homework, ladies and gentlemen, should you decide to accept it, is of course whenever we introduce an indicator, it is to backtest the indicator and take a proper look. Would it be worth having it all on its own and consider if I made it green and red and the above, it's not above so you can't, but you must exit the long. You can take the sell because we're still in sell hopper mode, so selly sell 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 sell, and then above buy 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 buy, below sell 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 sell. That's the kind of rule I'm looking at us employing here. Above the line we can buy it, below the line we can sell it. Is anything moving? I wonder, is the euro dollar moving? And it is, and there you go. We've got some above, we've got some below. Are we looking at a lot of pips there? 109.52 at the top, 48 not really. We're looking at 4 pips. And if we scroll back to where there was maybe something happening in the morning, there you go. What we got? We got some shorts here. 9.30 are below, 109.56 at the top. Ooh, there's maybe a 10 pipper in there and out. There's no hopper long, so you can't go long. But 109.44 down to 109.34, there's another 10 pipper in there. So you could argue that it would be fine all by its very own self with an above and below hopper rule. Obviously, the more simple we make indicators and strategies, the better. There you go. Dave says if you drop it on with the mid ball, it looks like a cloud. Buys above, sells below. Mid ball and you're back on. Looks like a cloud. Yeah, I got you. Sells below. Okay. Buys above. Yeah. Above on both though. I'd still want this. Take off the outer lines. Take off the outer lines. Let's see. You're gone and you're gone. There you go. Ah, got you now. Yeah, yeah. Okay. I don't disagree. I don't disagree at all. I like the EMA version as well. There's the EMA, so you could use the EMA or the mid Bollinger. But remember, the mid Bollinger is a slow or smooth moving average. So I'd suggest that the EMA would have the same effect, or of course our regular, let's say, higher impact strategy indicator. I think that would be better still, but obviously I don't want to name it and put it on a video that we're going to put on YouTube for everybody. You know what I mean? I like it anyway, and I like it a lot. That's it on the euro dollar. Let's see it on the GBP dollar, and of course scrolling back to the morning because it's a holiday, wouldn't you know? And there we go, back to the morning. What we got? 127.20, 127.30. There's a 10 pipper. There's a few decent moves in it, and the below or the above rule does seem to make a difference. So use as a market along with the regular strategy, Claude. I'd suggest the T2B2 as being the sort of for the moment the holy grail, if you like. Remember, there is no such thing as a zero loss strategy. All strategies deliver losses, but we obviously want to minimize ours and maximize our profits. And I think the above and below rule on this, the linear regression intercept, not the slope nor the anything else, the intercept, I like it a lot. There you go. And again, it is with thanks to Rory from a very, very, very long time ago. He talked about linear regression and introduced it to the group, and I absolutely, I've no problem with it still. I could never get to grips with the way we were using it for range. I didn't ever think it was as good as the bands, but that's me. And I do like this, the linear regression intercept. Looking at hoppers, it does seem to filter fake outs. I would agree. Michelle, there you go. We're in sell hopper mode. We got an RTF, so we're selling. It does hop here, but there you've got some what's the word, divergence now, and we've got lower highs, higher highs, so you'd still ideally want your divergence there. Yeah, absolutely. If you went long, I'd give you, yeah, it's a loss. It happens. There's absolutely no such thing as a zero loss strategy. But then you get your pips back in the sell here. There's more divergence with lower lows over higher lows. Yeah, it's divergence. It's reason to think about where you're locking in and coming out. A hopper long, either a MACD scalper or a continuation long, no short because it doesn't hop. So there you go. Michelle agrees. Looking at hoppers, it does seem to filter out the fake outs, and there is one example for sure. There is perhaps another example for sure. But, again, no hopper, you're going to come a cropper. So that story is the same, really. The hoppers are where it's at. But it is nice to have a sort of a sensible above and below rule. And I'm liking this one as being exactly that. I wonder, is this thing alive, a working Bitcoin? There you go. Just, to throw it on some different markets and have a look at all of the opportunities and the rules available to us. I'm aware this morning things would have been alive and awake, so we can look at there. A good bit of chop, of course, always. But if we go after 10, 680 at the top, 580 at the bottom. So I don't know that you'd have held it all the way. I'm not a big fan. I wouldn't trade it. Dollar yen. Back to the morning. Obviously, I've got to look at the morning because it is a holiday in the US, and we won't be seeing anything major. There we can see movement, and is anything at 145.44, 34 potential 10 pips, dollar yen, potential 10 pips, and of course well, there's a couple of pips in that. It's a hopper, you can take it. It stays below. It's a MACD scalper pattern. It's a thing. So, as always, I'll ask you to drop your thoughts in the in the chat group. There's gold. Let's have a little look at some of the other things. Gold, and yeah, I do have to go back to the morning. Back. Still got movements, still happening, still above and below, above, below. Yeah, there's not an icy worrying me there. Oil, West Texas, we'll go with. Back to the morning for a market that was moving. There's a nice trickly one all the way down, and Damo really likes the look of it. Thank you. Good. I was aiming for something simple, an above and below rule. You will, of course, note if we go to as at now, it moves quite quickly, but this line, that's because it's based on probability and statistics, and it's constantly evaluating, if you like, itself or its values. We can see there's a hopper and we're below, even as at now with the market closed. 1720-ish, we got 37,572-ish on the Dow, 592. There's a 20 pipper on the go with a hopper, and the above and below rule. That's it. The color and the thickness is choice, Claude. I've gone with an 8 here, but that's and yet, Philippe, that's the fast MACD on there. But remember, I always would like your feedback, so please do some back testing of your own, because only then, if you were doing a martial art, if we were all learning a martial art together, we'd want to know feeling is believing, wouldn't we? That's a Fibonacci number, Claude. That's why that setting, it's because it's a Fibonacci number. So there you go, ladies and gentlemen, 22 minutes in. I think we could end here. Don't worry, Ben, welcome. You'll get the recording in a moment. I'm going to upload it. But there it is. It's the intercept, not any of the others. And if I go zigzaggy line, add indicator and type LIN, you will see there are 4 available. It's the intercept I like as an above and below rule. You can add like the forecast, and then you get a cloud then, David, okay, Dave O'Hagan. Look, if I add the forecast, you'll get a cloud now. See, when we get the cross, in, out, in, out, cross to cross. This is something that you could do cross to cross, but I don't think we need the forecast, or only the intercept, and as an above and below rule. The forecast, you won't get it to be above or below. It'll zigzag through the price sometimes. There you go. I'll upload the recording as very quickly as I possibly can. I'll ask you all to please trade safe. Next week will be a mindset session, so I hope you're all ready for that. There'll be no indicators or anything, but I have prepared it already, and some of you are not going to like it. It is what it is. Trade safe, everybody. I look forward to seeing you on the next live session. Thanks, everyone. Bye-bye.